Hey, what's up? My name is Adam. Today I'll be making a video about Walmart stock. I'm basically going to be going over its business model, its financials, and also comparing it to other companies, among other things. This is just to stop people from looking at a graph of Walmart's past performance and using that as an indicator of whether or not they should invest. Use this video as a starting point for your own research. By the way, this is not financial advice. I'm not recommending you take any position. I'm just trying to help you make a more informed decision. So the business model. Well, to those of you who have never been inside a Walmart, I don't know where you've been. They basically sell everything from produce to clothes to paint. Whatever you need, Walmart already has it. One of Walmart's strategies, according to their annual report, is EDLP, everyday low prices. It's basically them saying that their prices are not going to fluctuate during promotions and when they're not promoting a product. Another strategy is omni-channel. So again, from the annual report, this is basically them saying that they'll continue to try to build out their pickup and delivery services. FYI, Walmart has a few main segments. They have Walmart US, Walmart International, and Sam's Club. Their biggest segment, Walmart US, has three main categories: grocery, general merchandise, and health and wellness. So let's get into their income statement. By the way, the time period I'm going to be referring to here is from February 1st, 2022 until January 31st, 2023. That is the 2023 fiscal year. Walmart's revenue is $611 billion, which is up 6.7% from the previous year. Walmart states that the increase was primarily due to positive comparable sales for the Walmart US and Sam's Club segments, which was driven by growth in average ticket. Now let's move on to their net income. Their net income was $11 billion. That is down 19% from the previous 2022 fiscal year. So one reason why net income is down 19% is because first, costs and expenses increased by 8% while sales only increased by 6.7%. They had to pay around $3 billion in opioid related settlements, although that's going to be paid back over time. And another reason is because they had to pay $800 million, or they had to spend $800 million to reorganize the Walmart International segment. Now then, let's move on to the balance sheet. So starting off with assets. They have around $9 billion in cash and cash equivalents. They are owed around $8 billion. By the way, that's an estimation because some people are just not going to pay them back. They have $57 billion worth of inventory at the moment, or at that point in time. So next is property and equipment. This category is pretty complicated, so I'm gonna kind of break it down a bit more. So as you can see, the assets they own are worth around $202 billion, but just like a car that's 10 years old isn't really worth the same amount now as it was 10 years ago. Depreciation kind of cut that down, and now once you take depreciation into account, the property and equipment is worth $101 billion. So leases are considered assets here, and a way you could think of operating lease right of use asset is kind of like rent, and then finance lease right of use asset, think of that as like a mortgage. Goodwill is basically excess money paid when acquiring a company. Let's say, for example, I have a $30 shirt and I sell it to you for $50. In accounting, it basically comes out to goodwill being $20 because my shirt is only worth $30, even though you paid $50 for it. So it's kind of complicated. They also have $20 billion worth of other random assets. They also owe around $54 billion to people in accounts payable. And before you freak out, I assume that most of that is to suppliers. So once they sell the good, they'll probably be able to pay them back and be okay. So they have $31 billion in accrued liabilities. It's basically stuff that they have received, but they just haven't paid for it yet. Their long-term debt is nearly $35 billion, and I think it deserves a look. So here's a table that shows when exactly it's due. It's due between 2024 and 2053, so it's over a long time. Here are the lease obligations for the next 5 years. It basically is related to the right of use assets, and it basically just breaks down how much has to be paid and when. They also have to pay $15 billion in taxes, but this category is too complicated, so I'm just gonna ignore it for now. If you guys want to learn more about it, just Google it. You'll probably find some information, but it's just too complicated to explain here. So we already went over Walmart US, apart from the figures, which I'm gonna go into later. So let's start off with Walmart International, and it's basically just Walmart but international. So I don't know what to tell you. So instead, I'm just gonna rifle off the figures for Walmart US, Walmart International, and Sam's Club. So Walmart US had 421 billion worth of sales. Walmart International had 101 billion, and Sam's Club had 84 billion. So speaking of Sam's Club, let's get into it. So Sam's Club is basically a membership-only warehouse club similar to Costco. So it operates in 44 states and also Puerto Rico. So sales are again for 2023, 84.3 billion, for 2022, 73.6 billion, and for 2021, 63.9 billion. So they have two different membership options. One is $50 and the other is 110. By the way, that is annually, and it contributes a pretty significant portion of their income. In fiscal 2023, $2.24 was paid out for the year, and in 2024 fiscal year, around $2.28 will be paid out. So that's 57 cents per quarter. By the time this video comes out, one of them is already missed. So you're looking at 3 more payments of 57 cents. So basically how it works is people who own the stock on the recorded day will be the people who will receive the dividends on the payment day. Well, as for the payable date, well, that's kind of self-explanatory, so I'm not going to get into that too much. So here are some notable events. They divested from Walmart Argentina, they divested from Asda, which is a UK retailer, and they also divested from Seiyu, which is in Japan. And for any of you wondering, divesting is just the opposite of investing. So let's list off a few figures and then compare it to previous years. So revenue is up 6.7%, and it's now $611 billion. Net income is down 19%. It is $11 billion. Their profit as a percentage of revenue is 1.8%. Their PE ratio is 24. That's as of April 21st, 2023. And Walmart's return on assets is 4.6% compared to 5.7% in fiscal 2022. For anyone wondering, return on assets, or ROA, is basically a measure of efficiency, how much a company can make based on their assets. So those figures alone are probably not that helpful, so let's compare it to other companies. By the way, guys, I tried to match up their fiscal years as best as I could, but I can't make it perfect because companies start their fiscal years at different times. Also, the PE ratios here are most likely to be different because these were all taken around the same time, but when you watch this, they're probably going to be all messed up. To compare Walmart, I'll be using Target, Costco, Amazon, and Kroger's. So let's start off with Target. Target's year ended was January 28, 2023, and they made $2.8 billion in profit. As a percentage of revenue, that is 2.5%. Their return on assets was 5.2%, and their PE ratio was 27 as of April 21st, 2023. Walmart is competing with Costco on two fronts, through Walmart and also Sam's Club. So their year ended August 28th, 2022. Costco made $5.8 billion in profit. As a percentage of revenue, that is 2.6%. Their return on assets is quite high at 9.1%, and their PE ratio is 37 as of April 24th, 2023. Next up is Amazon. One way that Walmart is competing with Amazon is by using its stores as a delivery hub and also a pickup hub. So their year ended December 31st, 2022. They made a loss of 2.7 billion. As a percentage of revenue, that's negative 0.5%. And the return on assets is a negative 0.6%. Their PE ratio as of April 21st, 2023 is 148. Although note here that Amazon is the most different from Walmart, given that they're more of an online store while all the other ones are more in person than online. So lastly, we have Kroger. Kroger's year ended was January 28, 2023. They made $2.9 billion. As a percentage of revenue, that is 2%. So compared to their return on assets, that is 5.8%, and their PE ratio is 11 as of April 24th, 2023. For profit percentage, we have Costco, Target, Kroger, Walmart, and Amazon. For return on assets, we have Costco, Kroger, Target, Walmart, and Amazon. From the PE ratio, we have Kroger, Walmart, Target, Costco, and Amazon. Again, guys, remember PE ratio is the most volatile here. So this is a summary of the information that I think is important. I definitely skipped a few details, but it's too long, and if you guys want to read it, you guys can read the annual report. I will leave a link in the description. If you like what you see and maybe you also have some ideas for what I can do better, just let me know in the comments down below, and I'll see if I can do that. So thanks for watching, and peace.